Hello traders, Jonathan with Forex Flow Trading. I want to kind of go over a swing trading example looking at a larger time frame. I tend to trade these flows using two accounts as I mentioned before. One is kind of a position trading account. The other one I will, maybe catch intraday levels against the bounces and things like that. If you don't trade at two accounts or you can't hedge, you can still trade just one account, but a lot of traders are focused on intraday trades and they get caught up in zooming so in close to a chart on a 5 or 10 minute time frame that they come sometimes miss out on the best moves. They don't ride winners and they get out losers, and they don't know how to really manage a position. You can be much more profitable, if you do swing or position trade, though. Just reduce your size and should be able to handle it a little bit easier. So I walked through the British pound over this last week. It's Friday, June the 8th. So I want to look at last Friday's email when we had non-farm payrolls, which is actually right here. See if I can pull this up a tad bit so you can see the date. This is June the 1st. This is a non-farm payroll day. And these levels were not posted on that Friday, so these are Monday's levels. I just want to show you, Thursday and Friday last week began to mention a rebalancing. So I try to give a heads up, a larger time frame, because sometimes that'll help traders. See the email. You find the email that went out June the 1st around 10, basically just giving some indication, the price action. This was after non-farm payrolls. When the market reaches that rebalancing point, there's some overshooting and some shaking out. And just mention position trading can be, profitable outside any existing positions, which the day before you could have got into some positions, but just didn't provide any new levels that day, but had, knew that the next week would provide some good trades. And the spike highs and lows will be the area to watch as the market recaptures. So what that really means, go back to the chart, is it when I made the post, this was the spike low. So now as the market rebalances and it recaptures higher levels, if you enter long, this is the area that, will kind of be the turning point of the low that's put into place. And that's all I'm trying to hint at, give an indication to. So we move forward, and this is Monday. Monday around here, June the 4th, and we get new levels that come out. Let me get that email real quick. We got this email June the 4th going out, in the New York time, as it usually does. So we're looking at the British pound. You see the British pound level. The buy is 93 to 153.16. And then the sell is actually 155.47.66. We're closer to the buys, obviously, but when you look at this information on Monday, and these are the levels right here, you've got this if you're reading the emails and my commentary, that this really is the area to watch as the market rebalances and recaptures. So if you move, didn't quite reach really the entry of the first zone, but you have to use this as an indication, and you have really good risk reward when you're a few pips away from a level and you've got a story that this is really, so you can put a definitive stop even under this spike but our cap is, maybe 10 pips or so under this spike. So great kind of trade setup. Or this is a 4-hour chart, so it gives you a bigger picture. And you can wait till you get this turn, and you can technically use our information with a technical chart to kind of enter along there as a trade. And so if you enter long, use this information. Then you use the sales as a guide to exit your long when you're swing trading. The next levels I posted was Wednesday. As Tuesday, we had some events and stuff. So let me pull that email up. Look at Wednesday's email. It's Wednesday, June the 6th, around 10 in the morning. Looking at the British pound, so we've got the sell at 155.66 to 83 with a cap of 156.23. And so as the market is kind of recapturing, rebalancing, the sales can be an exit for the longs if you're taking long on the trade, or if you're carrying long, you could hedge it up here and get this move down. Or if you're in, a previous sale, which I am, and I have been on the other account, I go long against it for the bounce and the rebalance, and I clear it off and I'm remain in the sell. But so we came in here. Here's where the levels, and then overnight in the London session, we got to move into the levels. And you can see on the 4-hour in there, wherever you got it, in the cap here. And so then it rolled over down, back to almost a 154 handle, so another 150 pips. So you could have rode it up 300 pips and rode it back down 100, 150. The information, if you kind of step back and look at position trading, you see the trades and you read the emails and really read the emails and understand what I'm saying and help guide you. A lot of times the larger time frame will help take some stress out. You're not looking at a 5 or 10 minutes, so it looks like a slower mover, but it's a couple trades this week, and you had a really good week. In yesterday's email, I gave an indication that, and I'll pull that up real quick as well. Okay, so yesterday's email, I gave an indication. It's Thursday, June the 7th. Basically, if today's levels continue to hold, look to roll back through the previous levels. So there's no buy on the British pound. The sell zone is a little bit higher for new entries. And if this holds, then look to roll back through. And so it gives you an indication to stay in the trade as long as those levels hold, which were, maybe 20 pips higher than where you took the sell. But it had already kind of really rolled off after hitting yesterday's levels into that 155.99. So anyway, just kind of an example of a swing position trade. If you kind of step back on a larger time frame, it can be. I like trading that way. You have to have a little more patience with it, and so you can't really step in on a 5 or 10 minute chart sometimes, and but also it's a bigger time frame, so you can plan better, you can manage your trades better. It looks a little different. You just want to reduce your size if you're not that experienced in it. But okay, guys, just wanted to share this past week on a pair, more of a swing trade kind of larger time frame. Just looking at the 4-hour instead of a 30-minute, 1 hour, or 15-minute. Okay, guys, until next time, good luck in the markets.